Hi, everyone, and welcome back to the Long Island Legends Podcast, the only podcast on Long Island where we showcase the most legendary figures in our community. And today I am joined here with my good friend and loan officer, Joe Buquicchio from CrossCountry Mortgage. Joe, welcome.
Well, thanks for having me, man. Appreciate it.
You know, we've known each other a long time, and I still can't spell your last name.
Yeah, it's 10 digits, a couple of syllables.
It's a lot. It's
Buquicchio, but Buquicchio you can hit me with too. That's fine.
Yes. So I have always said Buquicchio, but it's Buquicchio.
Yeah.
So this whole time you've never corrected me.
No, why would I?
I guess that's a fair point, but
If you want to believe you're right sometimes.
yeah,
you know,
and I
so-
tried to. I appreciate that.
Gotcha.
You've allowed. Actually, to be fair, Zach, for the longest time, it's sure, but I would say share.
I hit him with sure.
Yeah,
He's like, sure.
yeah. I mean, Dalton, you can't screw up. So if but yours, I think we're allowed to.
Yeah,
you
and
know?
the emails get tough too when you're at buquicchio@ccm.com. It's, got to make sure that's done correctly. Don't want to lose out on that.
All right. Well, thanks for having me. So thanks for being on the show. So, I wanted to dive into it. Obviously, first and foremost, how long have you been a loan officer for?
10 years.
Okay. So for the most part, I mean, you came in post-crash, right? We're talking
Yeah.
2015, right? Roughly. At that time, the market had kind of stabilized, right? It wasn't the bloodbath that occurred from, '08 to 2012, right?
Yeah.
Where things were barely moving. We started to see a slow rise. But at that point, was it safe to say by 2015 that you started to see not obviously what it is now, but a pretty robust market? Or did you feel that it was still a little slow at that time?
It's funny because in the past 10 years, I feel like I've been through the ringer of, like, when I first started doing this, it was cold calling refis. There was a lot of refis. And then I got into purchase business, and how I met you through Zach. Like, I met Zach, and then I said, purchases is kind of where I want to be. I saw the market be not a buyer's market. It was always kind of been a seller's market where the sellers had power. Long Island is just one of those places, right? But then when rates came down, obviously COVID happened. We saw rates in the 2s and 3s. Refis were crazy while still trying to take advantage of the market. Home values where they were then compared to where they are now, just astronomical. So I've seen the refinances happen, and the refinances boom, the purchases boom, and then, now 2023, 2024, things have kind of become more difficult on the buyer's end, securing loans and stuff like that. Affordability has just become difficult.
Yeah.
Yeah.
So to that point, right? Obviously, and I say this as somebody that is my business is, as you know, built on selling homes and moving them quickly, right? Like, especially like the rehab end of things, we've always been able to systematize and get through within an acceptable timeline. But the wild card, X factor for me, as you know, is how fast from when we get to contract, which is a challenge unto itself.
Yep.
But once we get to contract, how we can get to the closing table as quickly as
Making
possible.
sure it's going to close.
Yeah. And I could tell you, I mean, I've seen it run where loan officers are moving in 30 days, and I've seen others take 120 days. So I'm going to ask this question. Why do some loan officers just simply suck?
Lack of communication.
That's the number one thing.
Yeah, and listening, because there's so many guidelines. Off the top of my head, conventional guidelines. There's Fannie and Freddie. Those are two government entities that sponsor those mortgages. I think there's 1,200 to 1,300 pages of guidelines each GSE, and then FHA has another 15, however many 100 pages. I don't know all of those guidelines, but before I make sure that everything works out, I listen to the client. That's communication. Listening to them, making sure that what they tell me is in line. Go back to the guidelines, make sure everything's in line. Then go back and have that communication conversation with them to make sure that everything fits the criteria that we need. And, it's extrapolated even more so with non-QM, bank statement loans and all of that stuff. But if you're not listening, if you're not communicating the right way to a buyer, you're going to miss something. And that could kill a deal. especially when there's loan officers that are out there that are just sending out a glorified piece of paper they call a pre-approval.
Yeah, yeah, we all know that a lot of those aren't worth the you wouldn't wipe your ass with it, quite
Correct.
frankly.
Correct. Which is why we take it a step further. We go for the fast track approval. We try to get the mortgage approval before anything even really happened, like before we start making offers. These are some of the buyers that I'm working with.
Mhm.
Now that doesn't always happen all the time. Sometimes the speed of trying to get something done is you need to at least see the paper. I can't tell you how many times somebody has told me they make $90,000 a year and it's 87,000.
Yeah, and that 3,000 could be a difference.
Yeah, because you have, hey, we're at the top of our budget, and it's tough. Like with your homes, it's a different story because they're all move in turnkey, ready to go, move in ready. But when you have something at the peak, and then oh, you're only making 87, not 90,000. Whatever that difference is, could be the difference between deal's dead or not, DTI works or not, or you got to pay off some credit card debt before you get to closing.
Yeah.
And so many of those things can come up, and doing your due diligence with the proper communication and understanding the client situation before that, it makes all the difference. That's why some loan officers suck. And some of them will just go through the motions, think that, you curse, so I'm going to curse. The shit doesn't stink. And
Yeah.
they have everything together.
Yeah.
We're going to get it done. We're going to get it done. But they don't know the reality of the situation.
Oh, yeah, no, I mean, for those of you that don't know, a couple years back, you remember I had to bring you in on a deal with that loan officer from that bank that what I hate,
How
and
could I forget?
I
Yeah,
can't
yeah.
mention them because they
No.
do a lot of loans on Long Island, and how they do so many, I don't know, and, people could ask me
It
off camera
happens.
people could ask me off camera the name of this bank, but the point is if you have a pulse, they'll bring you on. And you remember, you never heard him, but he was literally one step above a talking dog.
How can I forget?
Yeah,
Yeah.
and we had to like throw him off. We did the deal in order to make it work. This buyer was never qualified for the loan product that
That he was claiming it was.
was.
The rate was like insanely low compared to what he was telling the
Yeah,
clients.
yeah.
There was no points involved in the transaction. And blah
Yeah,
blah
I
blah
mean,
blah blah. It's like,
it was outright fraud, right? It was outright fraud because he was I don't know
yeah,
how he actually got an
yeah,
actual pre-approval because eventually he issued a commitment letter. And remember, I showed you
and
that
that
commitment,
commitment
and
letter,
you're like, this isn't accurate.
nothing made sense.
Nothing made
Yeah,
sense, right?
yeah.
So, yes, I mean, the point is that I've come across, and some really, really bad loan officers. But to be fair, as much as I get angry about how bad loan officers are, a lot of times, right, the client themselves are their own worst enemy, right? I mean, I think that's fair to say, right?
Yeah.
So to that point, right? Which leads me to my next question: how are the clients? Because obviously you're a good loan officer, you know what you're doing, but it hasn't been without its challenges. How have you seen these clients, these borrowers, shoot themselves in the foot?
I mean, I had a client who leased an $1,100 a month Land Rover the week before his closing, and it was the debt to income ratio was tight as it is.
Mhm.
So my phone call to him was, "What the hell are you doing? Do you plan on sleeping in your Land Rover?" Because the deal died. Thank God we had his father who had some money coming in, just started receiving Social Security and all that stuff. We got him added on as a last minute cosigner, and we hit the deadline, we hit the timeline. But if that guy's father wasn't, a pension receiving, Social Security receiving, that deal's dead in the water based off somebody making a mistake. Um, Listen to your loan officers when they begin the process. It is, do not take out any new debt. Do not change jobs. We're asking these things for a reason because it can kill a deal. And like you said, the hardest part is getting into contract, and then it should be smooth sailing from there if you do your due diligence. But that happens. I had the one deal that I had in my career that died while it was in contract due to me having to send out a declination letter was because a client had changed jobs from W-2 to 1099 while she was in contract. And it bothers me because that's like the thorn in my side. That's the one that
The one.
the one that got away.
Yeah, yeah.
Still working with her to this day, and now that everything's in line after that change, I'm going to get her closed. It's
Yeah.
just a matter of time.
Was Mariana the attorney on that deal?
Yeah.
She was. I remember. Yeah, I remember her bringing that up. Yeah.
And it's I hate it.
Yeah, it's
I,
tough.
I tried to flip it to go bank statement programs. The deposits were there, but those bank statement programs that require minimum down payments that she didn't have. There was a lot of work that tried to save the deal, and that's a lot of what I do too is coming across, hey, I was told no by so and so, and trying to figure out a way to make it work.
Yeah.
You know?
So I think it's fair to say that a lot of buyers, right, like they've got to be very almost pinpoint accurate with the information that they tell you, right? You'll eventually verify it and go through it, right? But
Yeah.
they've got to give you some a thorough set of details, right? And be as transparent with you as you possibly can
Yeah.
so you could guide them. What do you feel as a buyer, a borrower, right?
Hmm.
I know you said like there are certain things you do. Listen to your loan officer, right?
Yeah.
But what are some things beyond that that they could do? Prep, document, gathering documents. If there's something that you could see, because a lot of them want to close yesterday, right?
Yeah.
What are some things that they could do that, aside from listening to their loan officer,
Yeah.
that they could have at the ready to make sure that the process moves as quickly as possible?
So some banks, and I'm talking about like not lending banks, I'm talking about like where your money is. They just have an easier process of gaining documents from them because you got to show 2 months most recent bank statements before contract. Um, some banks are easier to work with to get those transaction histories and stuff like that. Other banks are more difficult. Like you have to go to that branch, which will take some time and delay the process. If I can ask you for a transaction history and Chase, you can go right onto the website and pull up the transaction history and it shows me how much money you have and I could properly document it. Um, Whereas other places, if you have to go to the physical location, we may lose a day just by, hey, we could have got this online instead of that. Um, that's one thing that CCM is good at. We have actually like if you have online logins, you can log into our system securely and pull up like the bank statements that we would need. Credit. One thing that I do want to say, and I've been seeing it a lot lately when I run credit, is recently people had to start paying back their student loans.
Yeah.
And a lot of people didn't realize that they had to start paying them back or they would get hit. And there's a 90-day delay on that government loan, like if there's student loans that are government based. Um, had a gentleman I was ready to pre-approve. Hey, I just got to run your credit. I knew he had a 780 FICO score because I'd worked with him a couple of, like 6 months, 6 to 8 months prior. Hey, I got to update your credit report. I ran it, and the scores were significantly lower, like in the 500s.
500s.
Because he was 90 days late on his student loans, he didn't even know that he had to start paying them again. Student loans are like, stay on top of your debt. And I hate to see when I run credit that somebody had a late on a credit card when the minimum payment was $25. It's
Yeah.
like sets you back so far. Maybe I'll still get the loan done, but the interest rate that I could have
I
got you was
know.
so
From
much.
just a mental lapse.
Yes, because that on time payment, I believe it's 35% of your credit score. 30% is like the credit that you have, like the utilization.
Yeah.
But the 35, that on time payment is huge. So make sure you're paying your bills on time. Obviously, it just look at it this way: if you're asking somebody to loan you money, don't you want them to know that you're good with your money?
Of course.
Like if I was going to give you $100, I know you're going to pay me back. If you needed $100, there are some people that I wouldn't loan $100 because I don't think I'll ever see it again.
Yeah. Okay.
Does that answer your question?
It does answer my
Yeah,
question,
yeah.
which and that was something I was not aware of, right? Like of how with the student loans. I mean,
Yeah.
fortunately, ours are paid off, and I don't really carry really a lot of debt other than real estate debt. The only thing I have is like different credit cards that I use for the business, right? To rack up points because those Disney World flights.
Ain't cheap.
They're not cheap,
No,
right?
no.
It costs $5,000
Yeah.
for 5 of us to fly to Orlando these days.
God bless you.
Yeah, but and luckily I use the credit card points. But my point to that is, sometimes people have a lot different, especially with the credit card. Sometimes I know with business ones, there's different payment times, right? So it's not so for me, like I have to keep like a tight schedule because like this one could be due then, this one could be due then, this one could be due that. It's not like for all these other people who just log on the first and pay everything at once, right? So that's a very valid point that you made. And let's get into the biggest challenges right now that buyers are facing, aside from what you talked about from a loan standpoint, right? Because a loan officer is very much like a real estate agent. You become, and my wife, the same thing as a real estate attorney, you become quasi therapists to these people.
100%.
You know what I mean?
Yeah.
And so you hear about, the sob stories and, the ups and downs. I don't really see that, right? Like I'm on the back end of it. I'm talking to you. I'm talking to Mariana on the, the attorney side. I'm talking to, the agents such as Zach, right? But I don't hear like
You just want to know when we're done.
when we're done, what do you need? Okay, what do we got to do to move the deal forward? And that's it. I don't hear like the front end stuff. You guys are on the front lines as to like what people are experiencing. Obviously, everyone's getting outbid, right? Like that's still a thing here. Um, if you had to really point to the level, if you had to shine a light onto the level of difficulty right now for a buyer, right? Giving it on a scale of 1 to 10, what would you say that number is?
For a buyer, I mean, if rates get higher, then I would say it's a 10. I would say it's an 8, because you have on Long Island, you have extremely low supply, where you also have like from somebody, I believe it's Christopher White, that sends me an update every month about what's going on in Long Island's real estate market. From and I think in from April 2025 to April, and it was April 2024, the listings on Long Island are down 6%, but the values of those homes, the median value of the home for single family homes is up 11%. So you have 6% from April 2024 to April, not two, but
The amount of listings.
amount of listings is
Makes sense.
down,
Yeah, that makes sense.
and the value of them is up 10%.
Yeah.
So, the buyers that didn't buy then that are stuck trying to find it, and they may have been looking back then, they're still looking. So they get jaded because it's just like, screw it. I'm done buying a house. I'm going to go rent. And they don't realize if you rent for another year, next year that house is going to be worth another, maybe it's more like 4%
Well,
higher,
to that point, how much buyer fatigue is setting in? Because, we thought in 2020, 21, 22, when the market was bananas, right?
hmm
I feel as though this is a more difficult environment for
Without a doubt.
buyers now than it was then.
Yeah.
And people were just, it was all over the news about how everyone was getting beat out, beat out, beat out. Then rates were expected to go up naturally, and everyone thought, okay, they'll go up, but more supply will come on the market,
Right.
or it'll be a better market for buyers, right? Because sellers will have a more difficult time selling their house.
Yeah.
And what happened? The opposite happened, right? So when we talk about that, the buyers that they're running into these problems, and it hasn't let up. It has not, right? Like, this is May of 2025. We've been in this frenzy of a market for 5 years now. It hasn't gotten any better.
Which is where, like, me as a loan officer, I have to separate myself from the rest of the pack. Instead of having a pre-approval, which, like I said before, is
Mhm.
basically a glorified piece of paper to some, right? I have to take it a step ahead and get that loan underwritten before they go in, so that when the buyer's agent is making an offer and presenting it to the listing agent knows this loan's committed. We're actually waiting on you to make sure that the value is where we need it to be and the title is clean, which is going to happen no matter who the buyer is. You want to make sure the house is worth what you're buying it for and the title is clean. Um, doing your due diligence, making sure that the comps in the area, especially when you're overbidding. If you're overbidding so high that the value is going to come in short, I mean, what are we really doing here
Yeah.
if they don't have the money to make up the difference?
Yeah.
Looking at comps, asking the agent, hey, if we're making this offer, send me the comps in the area so I can make sure that this at least looks in line. If you're not doing that as a loan officer, it's scary because you're going in blind.
But now, to that, you've obviously talked about everything that you could do as a loan officer, right?
Mhm.
But I just wanted to circle back to the fatigue that is out
Oh yeah,
there.
yeah.
So the fatigue, and not to discount what you're saying, because we'll get to that. But the fatigue that is setting in for buyers across the board.
I don't
Because
want.
on the outside looking in, right, people like, even, people who live on Long Island, if they're not selling their home, they're not actively engaged in the real estate market, they'll ask me, oh, how's the market? It's got to be pretty tough, right? For me as a seller. And I'm like,
Kind of good.
pretty good.
Pretty good. Yeah.
But now, and then they were like, oh, well, I figure with rates being so high, it's like, well, yes, it's a challenge for buyers, but it's compounds the issues because less people want to sell, right? And because less people want to sell, there's less inventory. So now it's like we had a good amount of inventory, low rates. It was a feeding frenzy. I got outbid. Now we have high rates and inventory went down even further,
And I'm still getting out.
and I'm still getting outbid. At one point, does the fatigue set in so deeply across the board for so many buyers that eventually there do you see that resulting in any kind of correction at all? And I have an answer for this, but I wanna hear yours.
So it's happening across the country in some places, like places that got popular during COVID
Yeah,
when there was like no, work from home and all that stuff, like um, Vegas, Phoenix, Miami, their listings are through the roof, and they're actually seeing in some areas home values going down.
sure, especially in Florida.
Yeah, and I say it to my buyers all the time. God's not making any more Long Island. Like,
Yeah,
there's no active volcanoes out here, so there's not going to be any more land being made. And unless like Dubai, when they made their own land, like I don't
yeah,
see land being created on Long Island, not in the near future at all.
sure.
Um, because of that, supply is always going to be low. Demand is always going to be high
Because of the nature of the
of the
where we
island.
live
It's where we are. Like I'm stuck here. My family's here. I'm never going to move out. And I love it here.
yeah.
I've lived
Because
with
it's almost its own bubble, right? Like,
right.
it's almost it is its own little world because you, in essence, never really have to leave, right? You have everything that you want. You've got beaches, you've got schools, right? Like, yes, if you like the mountains or something, you take a ski trip, right? But by and large, right, there's not as much of an impetus to like venture out. Whereas once you start to go further west, whether you go to Jersey, whether you go to Westchester, like there's movement to other areas of that location where you could go a little further west. You can't really do that too much here.
No,
Your area is your area.
and I have my family that moved up, some family that moved upstate, and they're like bored.
Yeah,
Like they find their own, they make their own little bubble up there. But yeah, and even my 92-year-old grandmother, she's got dementia. She moved down to Florida, cost of living and all that stuff. And she came up here, and we still ask her like, "Hey, you're in New York now?" She's like, "Of course, I'm a New Yorker."
yeah, yeah,
And I have that pride too, where it's Long Island for me, and
yeah.
New York is where I want to be. And you also have like some parents that are like, "Oh man, I bought my house for 200,000. I would never buy that house for 700,000."
Yeah.
It's like, yeah, pops, but you don't understand what the value has done like you can't see it because
Yeah.
you've been in this house for 40
I know.
years. You're free and clear on your loan, right? And then those are no offense to the dads out there. I'm going to be one myself, but
Which
um,
congratulations, by
thank
the
you, brother. I
way.
appreciate it, man. I'm very
Congratulations.
excited about that. And those dads that are walking through home inspections being like, "Oh, well, there's shingle missing on the side of the roof. We can't buy this house." It's like, dude, you fixed the shingle for less than $1,000. You're going to walk away from a house that next year is going to be worth 20 grand more than what you buy it for now.
Yeah.
Your son is renting, $2,000 a month in a one bedroom apartment that he's
If
paying.
he's lucky, that's a good
If he's
deal. That's a
lucky,
good deal
if he's
these
lucky,
days.
so that's 24 grand a year that he's paying to a landlord who that apartment is probably gaining him equity, that landlord, and you become a renter for life that way.
Yeah.
It's an uphill battle. You're digging yourself out of a hole if you're not a homeowner right now. But and I don't want to say the ends justify the means, but there's a light at the end of the tunnel, and the light is equity.
The light is
It's
equity.
how you build
Yeah,
wealth.
and like I said, we are fortunate to be in this bubble where it's a great place to live. Like I said, it's got
Amen.
everything. There's
Yeah.
not, and I listen. There's parts that I don't like. There's parts that I love. But it's got everything you need, and because of that, and because the towns, as much as I complain and rail on the towns, like
It's your business, yeah.
they, in some ways, because they have made it so difficult to build, right? Like overdevelopment is not a thing here, right? Like you talk about some of the problems that exist in these markets that you had just mentioned, right? And
Hmm.
I was just in a mastermind, I'm in a mastermind where
Yeah.
we go down and we meet, 3, 4 times a year. And so I was just down there last week and I was like, well, what's going on in your market? Well, we just had too many people come in and overbuild. You know what I mean? You're not really gonna hear that around here.
So the house is just sitting vacant, or the apartments are just sitting
They're
vacant.
just yeah, I mean, I didn't get into too much
Right.
detail as to, like, how bad the situation was there,
Mm.
but that was a problem, right? You had just an area where, builders could come in and put up 500 homes, like, it's not happening around
No.
here, you
No.
know? And obviously the cost and everything that the town makes you go through, right? Like, I just did a one-off house. I bought the land for $73,000. I practically stole the land. I sold
Crazy.
it for $745,000, $742,000. But when it was all said and done with the time that it took and with everything that the town put me through, I did it because it wasn't that hard because I've got the systems in place.
Right.
But for somebody else that, because there's a lot of these guys that did these one-off builds, they're not going to do that. It's not worth it for them. For me, it was like, all right, we made a little bit of money. Didn't really cost me too much time. But when it's all said and done, like the incentive isn't there.
And if you're not knowing the ins and outs, you could sit there and delay that process even more than your holding
Even
costs
more
are
so.
up.
So now it's like, the ability to bring new inventory on the market is severely impacted by what these towns are doing. You know what I mean? And so it's good and it's bad, right? Like on one end, it's like values keep going up. So it does make things harder for people to buy. But for those who have, bought and sustained, the headwinds, like they come out, like you said, 20, 30 years later, and they've got a significant chunk of change on their hands. And, you know, I don't know what the situation will hold for ourselves, right? Buying houses, people who are buying houses for, let's just say, 500 to $1 million, right? Do I think that growth that you saw, that like our parents saw, that bought their house for 100, 200, that it went up 5x? No, probably not. But rest assured that the rate of appreciation here is going to far exceed other
Other
parts of the
parts of the
country.
country, without a doubt.
Yes.
And it's already showing it this year.
Yeah.
It's the proof is in the pudding. Just look at the numbers between Redfin. Well, they're out there. Do your research about other markets compared to Suffolk County, Nassau County. We're gaining. And making it more difficult, but it's worth it. That's the way I see it.
Long Island residents, do you have a house that you want to potentially sell off market, your terms, your timeline, your way? Or do you know of somebody that could benefit from that? Then definitely give us a call. You can reach out to us at 631-333-SELL. The number is below, or visit our website at SuffolkCountyHouseBuyers.com. And for any deal that you refer over to us where you are not the seller, the first deal you refer to us, we pay a $5,000 referral fee. The second deal, we pay a $10,000 referral fee. And get this, the third deal that you refer to us, we will split the profits with you 50-50. And some of our deals are multiple six figures, so this can be a life-changing amount of money. It could pay for weddings. It could pay for college, anything that you choose from. So please take advantage of this great opportunity. Once again, we're looking for off-market opportunities where a seller wants to sell on their terms, their timeline, their way. So now we've talked about the buyer fatigue, right? That's there, right? Do you see any in the form of rates? We were just talking about this before it started. Do you see any kind of relief in the form of rates coming down the line? Because, we've talked about rates significantly, you and I,
Yeah, we always do. Right.
for especially the last 3 years, right? When the rates sort of shot up, we were like, oh, what is this? And then, now it's been 6-7% consistently across the board that way.
Yeah.
Right.
We're almost near highs for the year. You've heard it so many times. I don't have a crystal ball, and for the past 3 years, we've been talking about like, oh, maybe we'll see some dip later. Maybe we'll see this. Maybe we'll see this.
And you see it for a
yeah,
moment.
yeah,
It
yeah.
comes in for a moment, a month or two, and then it's gone.
I think for a day in April, we hit 6.6 on the average of rates, and it was like the great refinance in April, and that was like one day before it started to tick back up. There's a ton of volatility, and if I knew where rates were going to go, I wouldn't be here. I'd be on a yacht somewhere.
Yeah, it's fair.
I think that you have to remain, just talking about buyer's fatigue and where rates are, the rates cause a lot of the fatigue. You have to remain positive and realize that when they do come down, you will refi. And then as long as it makes sense to do it financially, obviously. And there was a large couple of people on social media saying like, oh, how do you feel about marrying the house and dating the rate now? You heard that.
Oh,
marry
sure,
the house,
sure.
date the rate.
But what were they saying that?
It was just like a joke that like marry the house, date
No,
the
I
rate.
knew. But why were they saying? Why do you feel that way now?
Because it's been so long that rates have been up, right? Like
got
almost
you.
like making a joke. But over the past 3 years, that rates have gone up. If you look at a 4% year over year, your $500,000 house is now, 525, 45, let's say 570 that you bought it for. So yeah, okay, I'm paying an elevated interest rate at this time,
Yeah.
but I gained 70 grand in
People
equity.
date for 4 years, 4 or 5 years, right?
And people have been in toxic relationship dates for dating for toxic relationships for that many years. So, it's one of those things where,
and it's still like we talk about 6% rates as if 7% rates as if they're high.
I'd kill for a 6% right now. You
Yeah,
know what I mean?
you know.
And yes, they in the '80s, they were 14% and stuff like
Yeah, you
that.
know what I mean? But, like, I mean, yes, comparatively speaking, they are higher, but historically speaking, we're kind of in an average right
Yeah,
now.
right. And uh, the market wouldn't be sustainable if rates ever entered what they were when, when my mom and dad bought their house.
Yeah.
But um, when rates come down, you refi. That's got to be the plan when you're going into a house if you feel that the rate is elevated. If the rates continue to go up, at least you're in that house with that 7%. I mean, there's some guys that I talked to that I closed on them a year or two ago, and they DM me on Instagram like, "Let me know as soon as I can refi." And I'm like, "Sit back, relax, like nothing yet, but just know you got that equity building, and as soon as it happens, like every loan officer should not be you can't wait for the day that rates dip because then it'll make home buying easier. Just the amount of debt to income ratios that
Mhm.
open up means there's more buyers. Hopefully, we get more
Yeah.
supply, but that's a different story. But the refis that are out there are going to go through the roof. I don't. I read it somewhere, but there was more home equity lines of credit than mortgages that were written into. I believe it was 2024. There was more HELOCs than actual mortgages, which is people don't want to touch the rates that they have. They want to take advantage of the equity that they built up.
Well, that makes sense because there's, listings are low, right? Buyer activity is low,
Mhm.
right? So because the rates are high,
Yeah.
um, and now you've had all these people that bought at a certain time. They've seen an increase in equity, and I actually, it was you said that I was like, yeah, that makes a lot of sense. It makes a lot of sense.
I'm not touching my 3% rate in order to take cash out right now, but and there's a lot of people that won't sell because of that fact too, which keeps the supply
Yeah,
low.
yeah. And do you
You know,
think there's a number in your head that that people enter? It's not six. It may be 5, but I want you to answer this question that turns the switch on in somebody's head and says, "All right, you know what? I'm good now. Time to sell."
I think if we see rates in the fives, it'll feel a hell of a lot better. I know that 7 starts to scare people.
Yeah, I know.
That consumer sentiment goes down significantly once they see 7 on the national average,
Yeah.
which I believe this morning it's 708, 7.08 is the national average. Um, if we see low sixes, there's still people that should have a conversation because the other thing that we haven't factored in is credit card debt's at an all time high. So, there's a lot of people that are hurting. There's a lot of things that are coming into
Yeah.
play.
But now, so you're talking about those buying homes, right? I've
Hmm.
heard, I think Barry Habib has said this, that consider that 6 or 7% rate as a gift, right? If you can factor in ref- looping in all the credit card
Right.
debt
It's
and
called a
everything.
blended rate.
Yeah.
So you got a credit card of 30% and you owe, some people I've seen they owe upwards of $50,000 across, 5 or 6 credit cards. 20 to 30%. That's really crushing you month to month.
But now, can that be done on a purchase end of a transaction?
No, it
No.
can't.
Okay.
No, it can't. But you know, if someone said the best time to buy real estate was 5 years ago, the
Yeah.
second best time is now.
Now, I've
You
said
know,
30 years ago, but
right?
five would be a
Yeah,
fair
yeah.
thing to say given what
We
happened.
should
Yeah.
have been buying houses when we were in our parents' womb. Like
Yeah.
that's
Yeah.
that's really what it should have came down to. But the point is the wealth to get there to do
Mm.
it, and that equity can be a vehicle for it. You know.
Okay.
Yeah.
So for a loan officer right now, that's something that, like, if you're potentially, flirting with, you have a lower rate, right? A
Mhm.
refi, if you can get rid of all that bad debt and elevate, even if it's an elevated rate, depending on the person, may not be a bad thing.
Looking at the specific situation, yeah, every person's scenario is different, but there may be where like a HELOC most of the time is interest only.
Yeah.
So if you're taking out $100,000, you make your minimum payment on it month after month for 10 years, you're still going to owe that 100 grand. It doesn't make sense to do
Sure.
that. You got to be paying that thing down. In some situations, when you look at the numbers, it may break down that you're saving money each month if you did a cash out refinance, getting rid of your 4.5%, 5%, and and prepaying your loan so that you're because say you're 5 years into a 30-year loan, you're at 25 years. Now you're tacking back on another 5 years, going back to a 30. You have to look at not just the monthly savings paying down all the credit card debt. The credit card debt continues to grow astronomically because of how high the rates are. But you also got to look at the overall life of the loan by paying off that debt too. There's a lot of different factors that go into it. And there's so many variables because of
Hmm.
a general situation.
Okay.
Yeah.
Now, as we're talking about the problems that buyers are facing on the rate side.
Mhm.
It's been talked about, but it may become a bigger story is insurance cost, right? Like that's factors in because everyone thinks, oh, my rate, my rate, my rate, but you don't realize like your payment is comprised of, principal, interest, insurance, taxes, right? Putting
Mortgage insurance, but none less
yeah,
than 20.
but put taxes aside, just homeowners insurance, right? Has that played an impact for you in getting loans done?
We had a deal yesterday close that I had to put them in touch with the insurance agent that I recommend. Um, I can give them a list, but I end up giving the person who has my homeowner's insurance because I know they do well. But like the client had come up to me with a $5,300 a year quote for their homeowner's insurance. My guy ended up getting it like 2,000. That $3,000
Mm.
difference in is not just out of pocket, which
Yeah,
they would have, would have been a whole different story, but the monthly on that too.
250 a month.
Correct. You're talking about a $250 a month difference.
What does that equate to on purchase power, roughly?
Um, so you figure every 5 grand is like $35 a month.
Okay,
So I have so many numbers going through my head, I
so
can't even think about it,
so
but think about it that
so
way.
about
So
40 grand.
yeah,
It's
in
almost like
purchase power.
yeah,
Yeah.
yeah, and 40 grand.
I
And
was
think
I was gonna
about
say
how
like 35 because
yeah.
I always want to have the cushion. I always want to,
Mhm.
under
Yeah,
promise and over deliver. So yeah, 35 grand to 40 grand in homeowners insurance that you lost out in purchasing power. Exactly.
yeah.
Crazy.
So, is other parts of the country are obviously experiencing some significant headwinds, right? Florida being one of them because of the skyrocketing insurance cost, right? Has there been talk about that insurance cost being because obviously these insurance companies they're going to try to spread the risk however way they can. Obviously, is do you feel like it's going to stay mostly in those areas or the we in the New York area where we like to think we're insulated, do you think we're going to absorb some of
I
that?
mean, we've seen it too. My brother has a house where he got a letter in the mail from his insurance company, and they basically said, "Hey, we're dropping you." And when he tried to figure out why, they were like, "Oh, we're actually going out of business in New York."
Oh, okay.
And then
That's good to know. Yeah.
funny enough, a month later, they sent him another letter in the mail saying, "We'll reinsure your house, but it'll be instead of the $1,400 that you're paying, it'll be 3,600." So it's like, wait, I thought you were going out of
Yeah,
business.
yeah, yeah.
That may be a weird situation, and who knows if my brother was telling me the real, but that's what ended up
What did he
happening.
wind up doing?
He ended up reaching out to one of the insurance agents I recommended,
Okay.
and I think he's at like 2,800 instead of 36. But still, to
He
go,
it doubled.
yeah. But what they were quoting him from what he originally had was tripled.
Yeah.
So it ended up being doubled when he shopped it around.
Mhm.
It's becoming almost necessary. I tell every client, listen, speak to your insurance person that you
Yeah,
want to
as
work
much as
with.
they rate shop, you got to yeah,
100% right. If you're going to be shopping me around, why aren't you shopping around for homeowners insurance too? You know, Allstate's, Geico's, State Farms. Like, don't get me wrong. On some policies, they're excellent, but sometimes there's just that outlier where it's like, why is Geico hitting you for $5,400 a year or 5 grand a year? Reach out to somebody else, please, because it makes me look bad when they get their locked closing disclosure of their loan estimate, and they're like, "Why is the payment up another $300, $400?" It's like, dude, it has nothing to do with me. I'm a glorified middleman at that point.
Mhm.
I'm taking the info that you gave me from your insurance company and putting it in a piece of paper, and that's something too that we kind of have a conversation about while we're going through the initial pre-approval phase of who do you usually use for like your car insurance. Reach out to them, get an idea of the values of houses that you're looking at, because if you're asking me for a breakdown of monthly payments and out of pocket payments on a house, you should have a quote from an insurance company to at least give you a ballpark of what you're looking at too.
Okay.
You know?
All right, so I'm going to end off with a few different things, but to sum up, as far as the state of the Long Island real estate market, right? Like you
Mhm.
said, the best time to buy was definitely
Mhm.
5 years ago, really 10 years ago, right? I mean,
Yeah,
realistically speaking, right? For a lot of people who are in the market now, 10 years ago would have been incredible, right?
yeah,
Like I know what I bought my house for in 2012 and what it's worth now. You feel like while that appreciation rise may not be that same almost arrow that pointed
yeah.
straight up,
It's that
it's
curve's not going to happen that
that's not
aggressive.
gonna but it's still prudent for people on Long Island to not be short-sighted, right? And if they find the house, because I've said this, and if you disagree, but it doesn't sound like you will, if you like the house, if this is the house for you, be as aggressive as possible because you're not gonna regret it, right?
Yeah,
Safe to say that?
yeah.
Okay.
Agreed.
All right. So obviously I wanted to cover that. The other thing I wanted to talk about was um as a borrower, I said and we touched on this a bit, but I wanted to circle back to it because I said I would. Borrowers that are having a difficult time, what are certain things that they can do right away to improve their purchasing power, right? Because I we mentioned insurance costs, but there's some things that they could do on their own, right? What are some like little hacks that you could say to a borrower like this, like you've got to go to the max, right? Because that's what it takes to get the house, and both agreed
Yeah.
you're likely not going to regret it. But for somebody listening, what are some things they could do to give them the best chance they succeed if they really have to get that purchasing power as high as possible?
It's funny you say that because I had this conversation yesterday. I got a gentleman looked at his credit. He has some small credit cards. Like the balance owed is like $100, but the minimum payment on it is $25. Like I was telling you before, $35 a month is roughly 5 grand a month.
Yeah.
So paying down that $100 balance on the credit card frees up his DTI by $25. So that gives me what, 4 grand in purchasing power right there, as long as the housing debt to income ratio is
Yeah.
there too. The other thing is talking to the right loan officer. Depending on your situation, like child support is something that could be grossed up. Non-taxable Social Security income is something that could be grossed up. These are things where if you're getting a paycheck, you're getting taxes taken out of your paycheck. Your W-2 is your W-2. That's what we can use. But there's other things. Knowing the guidelines will increase your purchasing power too, because there's things that you can squeeze out of the DTI. Talk about maybe buying down the interest rate. If there's a situation where you're able to get a seller's concession, taking that seller's concession and buying down the interest rate will increase your purchasing power, as long as the values will get there. God willing, I haven't had an appraisal issue. Like,
Yeah. We
I've been,
were
I've,
for a while.
yeah, but
We
I
were
haven't
in
had one in a while.
2020 to 2022
Yep,
to, I was running into a lot
it
of
was getting
appraisal.
tight. Yeah,
Yeah, not so much anymore.
not so much anymore. And
But people were also still, a lot of them were waiving appraisals. I mean, I accepted an offer last night on a deal, waived appraisal.
yeah,
And I turned down another offer on a deal that was so much higher, but that they wouldn't waive appraisal. And I was concerned, right? So,
right, which is where talking about increasing your purchasing power. I mean, talking to the right loan officer, the right bank, because there are some banks that'll only lend out 30% of your DTI. Say you're making 10 grand a month,
yeah,
right? You're only going to get $3,000 on a mortgage payment. When I can go up to 46% of $4,600, talking about a $1,600 difference.
yeah.
It's astronomical. So those banks where they have to, if they're publicly traded, have to adhere or appease their investors. They're looking at less risk. When working at CrossCountry Mortgage, which is the nation's #1 retail lender in the country, we only have to adhere to the guidelines that are set forth with Fannie, Freddie, Ginnie, and through the VA. So when I'm looking at these guidelines and I have that ability to stretch,
Hmm.
as long as the buyer is comfortable, obviously, you don't want anybody to be in a house where they got to be eating ramen to make
Yeah,
things
no, of
to make
course
things
not.
work.
Yeah.
But in this market, you need every edge you can get, anything you can do to separate yourself from the pack.
So I will end with this. You've been a loan officer for 10 years.
Mhm.
How long have you been a cross-country mortgage? I probably should have asked that in the beginning, but it'll make
Um,
sense when I
so 2019, I made the switch. 6 years, yeah.
Okay. What is it about
2018, 2019,
Okay.
yeah.
You talk about certain banks, right?
Mhm.
It's harder to do things. There's more red tape. The guidelines that they
Right.
have to follow, you don't necessarily have to adhere to. And again, for anybody watching this, I'm never telling you to buy something you can't afford,
No,
right?
no,
If it's tight and you don't feel comfortable, don't do it.
I wouldn't do it.
But
I would say like, you sure you're gonna be able to pay? Because
yeah,
I have to make sure that you're gonna be paying it.
yes, your ass is
My
on the line.
NMLS ID number is on everybody's name that
Yeah, yeah, yeah,
every
yeah,
loan
yeah.
that I
No,
do.
that's important. But sometimes, like you do have to do what you have to do. If this is the house, right? Especially if you see an upward trajectory in your career, and
Mhm.
this is the house that you could realistically see yourself staying here for 10 years.
Right.
If you got to push it, and I speak from experience because the house that I live in now, at the time when we went to buy it, was a push for us.
Mhm.
But at the end of the day, I don't regret that,
No.
right? But what are these for these buyers that need every edge that they can get, right? What is it about cross-country mortgage that is, in your opinion, the separator versus a lot of these other banks that are out there?
So the systems that we have in place, where we have like my processing and underwriting team, I've worked with them every single day, and any bank will have their people that they work with, but we're not brokering this stuff out. It's done in house. On top of that, there's just so many different ways that like I can reach out to the insurance agents that I've worked with over the past 10 years, where I can say, hey, this lady got a quote for 5 grand. I need something that's going to make this work. And it's just having that communication. I met him through that gentleman through CrossCountry Mortgage. There's guys at CCM, like the number one loan officer closes 50 deals a month. The systems are in place so much that like we can now send links to them and they can fill everything out and everything gets completed. Credit gets ran. Everything is set where I don't even technically have to be on the phone with a client and I can have a pre-approval sent out where I've never even spoke to them. Everything's uploaded into the system. Approval for credit to be ran is ran. AUS underwriting is done. And here's your pre-approval without even speaking to me on the phone.
Yeah.
Now, that's not the way that I operate. I
Yeah, you
always
wanna
want to
take it,
speak.
and you wanna take it a step further to know that when your name's on it, like,
Correct.
yes.
Nobody's too busy right now to not be. I try to push face to face because it is a stressful process. Even when I'm doing loans, I get stressed out and I know what the heck is going on.
Yeah, and then
So
you have people like me because I haven't mentioned, like, Joe does a lot of, like, the loans that, like, for refinances on my own house, or I refer him buyers that I might have for my house, and then, you'll have somebody like me, like, calling up
what the
and,
hell's going on?
"What's going on?"
What's
You
going
know
on?
you
Yeah,
know?
right.
Yeah.
And then
I don't help the situation probably much.
yeah, but listen, you do what you got to do to get what you got to get
Yeah.
done, and that's commendable. Now, after the fact, after a close, like it's obviously the hand holding, making sure that you understand every step of the way, and nothing comes out of left field, because that is, hey, I thought I was supposed to bring this, and then the bank at the final hour told me I have to do this. You never want that to happen. So you make sure you take that time to do it. But then after the closing, there's also like we have something called the buy now, refi later, where when rates come down and you come back to me to do the refinance, your bank fees are zero.
Okay.
So,
Yeah, that's an incentive,
people
sure.
also call it like the junk fees and stuff like that, like processing and underwriting, but it doesn't matter what bank you're going to, you're paying those fees to get it done. And everybody's being as competitive as they can be to try and bring in as much business. But to know, hey, God willing, in a year from now, rates come down, you want to refinance, you come back to us and we'll take care of you. We'll make sure that your loan is as cost effective as possible.
Okay.
Yeah.
All right. Well, that's about all that I have today.
I do want to add one thing.
Yes.
And it's something that I really need to talk more about in all of my conversations and everything. So CrossCountry Mortgage is one of the only banks that I know that offers a program like this to any and all first responders. I don't know if we spoke about this. So we offer a line of duty death benefit to any first responders: police officers, cops, corrections officers, firefighters, EMTs. God forbid they're killed in the line of duty. CrossCountry Mortgage forgives up to $525,000 of that loan, so the family's not stuck with the bill.
It did not. We've never actually talked about this.
I know. And that's something where it just popped into my head because we're talking about a whole ton of stuff.
Sure.
But this is something that, I'm not saying people are going to want to pay more for, and it's not like you don't pay a higher interest rate. You don't pay a fee for it. We provide this, it's something that CrossCountry Mortgage provides to that community as hey, thank you for having more guts than we do.
Yeah.
You know?
To be fair, CrossCountry's probably, I mean, I can't say, but I didn't know enough about it, but they probably should promote something like that.
I know.
More.
And that's in my head going into this was like, you know what, I got to talk about this. And just, of course, we talked about everything under the sun. But yeah, that's something that I think everybody needs to know about, because I don't know of any other company that does offer that.
Yeah.
And it would be horrible if we ever had to call back on that, but at least that peace of mind is there where it's like, hey.
Yeah, God forbid something happens, your biggest asset, a good portion of it presumably is taken care of.
Agreed. Yeah.
Awesome. Well, Joe, thank you very much for
Thanks
being
for
on
having
the
me,
show.
This is awesome.
I'm glad you were able to come on. I hope everyone who watched this got value from it. And if you are somebody that is in the market for a home, talk to Joe. Have him look at your situation. He's going to point you in the right direction. Like I said, he's done a lot of my loans. He's done loans for houses that I've sold where I needed the borrower needed a good loan officer. I've referred them over to Joe. So if I trust him, and if he could, because for those who know me, like, I'm not an easy person to work with, and I can be very, very demanding. So the fact that he and I can hang with each other is a testament to him. So, you'll be in good hands. So once again, Joe, thanks for coming on the
Appreciate
show.
you.